Hey everybody, welcome. It's Mike Smith from Hawkeye Options here with a little bit of an interesting trade idea, a bit out of the box. But that I think is where the market is at the moment. I think we've got to look at the market as one of being a little tricky, a little fragile, and as a result requires interesting potential ideas to try and secure some potential profit. We've got Apple charts in front of us here, and we've seen Apple move into uptrend from really the beginning of March and has had a great run up, a couple of retracements there. And of course, we have pulled back a little bit from the high we saw last 4 sessions ago there. We hit a pivot high there of 112. But still, if we look at the 2-day and certainly the weekly chart, the trend is still very much to the upside. So we're looking to potentially take advantage of that. We see a key level probably around 110. And should we break that, then there's not much stopping us really from trading up potentially as high as 120 on the underlying. So we thought about this in terms of, well, how could we best trade this? Keeping our potential loss low, but also giving us a good opportunity for profit. So the idea we've come up for today is really looking at a butterfly trade, which for those of you less familiar involves buying a call at a lower level, buying a call at a higher level, and then selling two calls in the middle of those two bought call legs. So what we're thinking is if we placed our first bought call here at 110, our second bought call at the top end of the potential range if it breaks that at 120, and then sell two calls at the midpoint, which is 115, and look for doing this a couple of weeks out, then that trade would cost us around about $1 per share debit, which means that that's our maximum loss. So if we entered 10 contracts, that will be $1,000 investment in this particular idea. We could obviously enter less than that. If we entered 5 contracts, it would be $500 in this trading idea. So we'd buy 5 contracts of the 110, buy 5 of the 120, and sell 10 of the 115. What that means to us is we want the stock to finish somewhere within this range, between 110 and 120. And with this bullish vibe that we see on all 3 charts, there's a fair chance of it doing that, particularly if we continue to get a dovish Fed and oil price holds above that $36 level, which seems so important. Our potential maximum return on this is the difference between our lower and middle strike, i.e. $5. So we're looking at a $1 investment for a potential $5 return if at the end of the period it finishes around that 115 level. So in other words, a potential 400% return on investment. But of course, that's if it finishes within that range. Our profit zone, if we invest $1, is somewhere between 111 and 119. Anywhere inside that range equals profit. So it is a little bit of a riskier idea in terms of it's got to do some work to get into that range and then stay in there. But from a technical point of view and from an underlying market point of view, it seems like a trade idea worth exploring. So that's what we're looking at today as one of the potential trades that might take advantage of a market which is relatively difficult to play at the moment. And that's just one of the trades I'm considering for today. So before we go, if you'd like to see everything I'm considering and see the trades I'm really taking, why not take a trial to my Options Elite alert and training service? That way, you can see exactly how I find the best trades that can produce the largest returns whilst keeping the risk low. Just click on the link below and get started today. You'll be glad you did. See you soon.